survival. That is what trading is actually all about at the core. Because if you can't survive, well, then you have no opportunity at all, no chance at all to thrive, right? Have you ever heard the saying, survive and thrive? Well, you got to survive first. And if you can't survive, meaning you have no money, well, then obviously you're not going to be able to make any money. So I want to show you how I survive as the market. And this isn't anything unique to me. This is something that you need to be doing. So if you are a beginner day trader and just getting started in the stock market, or I guess really any market, whether that be the Forex market, options market, crypto market, you need to apply and understand these general concepts. And don't worry, I'm not going to sit here in front of the blackboard the entire time and lecture you in theory. I'm going to show you some of my real life trading results that illustrate exactly what I mean in this lesson. But just to first set off some context, what I want to show you here is I made a trade and the trade was on Boeing. So ticker symbol BA, you're going to see all this. And I shorted the stock. Now, if you're brand new, just getting started, like I said, shorting means I want to see the price go down. When prices go down, that is a good thing. Wait, what? I know, crazy concept the first time you hear it. But yes, in the stock market and in many financial markets, you can make money when values go down. So that's what I'm doing here with Boeing. I'm going short, meaning I want to see that price go down. I believe it's going to go down. So let's go to my desktop and let's see how this Boeing trade actually plays out. All right, it's working its way down that area maybe. So watching very closely. And if it looks like it wants to break through 185.50, I'm going to hop in. It's working its way down there. Okay, I'm in at 185.58, anticipated the break a little bit. So taking on a little bit more risk because I didn't quite get the break, but I don't want to potentially miss out on it. But I like the chances that it can break through 185.50. So if I'm right, I should be rewarded quite nicely. But as of now, hindsight here, I should have waited because now it's bouncing back up on me. But we'll see if we can get the move back to the downside here. The SPY rolls over here, that would help me out very much so. In fact, I think that's going to be the anchor that drags it down through 185.50. So I'm going to need the market's help here. But right now the market's actually going up and not helping me at all right now. But we'll see if the market wants to actually roll over here. I'll show you what I'm seeing. So right now the markets are actually breaking out. At one point they were looking like they might want it to roll over, but I'm going to need the SPY to pull back here if this thing's going to actually help me out here. But as of now, I didn't wait for the break. I anticipated it, and as of now that was not the right thing to do. But we'll see if this thing wants to roll back over. What's good here is that BA is just going sideways right now, yet the market is still essentially going to highs. So, I mean, just any sort of weakness at all within the market should really, really help me out here. But right now, the only reason why this thing continues to go sideways is because the markets are going up. And the markets maybe just are going to drag this thing up through my stop loss and I'll have to bow out. But, well, at this point, preparing now to potentially take a loss on it. Yep, the markets are just not helping me out at all. If it goes over 186.50, I will need to be out. It's getting very, very close. I'm using a mental stop loss here. So watching level 2 is like a hawk. And I got to get out. So That is disappointing. Not a pleasant experience at all. And just a little bit of cruelty. It's so embarrassing to talk about and admit. But so the high of that candle was 186.51. If you scroll back, notice where my exit point is at. Unfortunately, my exit point is at 186.51. In other words, I got out at literally the high. The top is, I was me on the chart. Hey, everybody, that was me. I'm the one that created that data point on the chart by getting out. And again, from a shorting standpoint, when you get out by buying. So I literally bought the top in a very, very bad way, and then things went in my favor. But the question and the key concept that you need to realize, because I get it, I can sit here and laugh about it, it's super annoying, and then, a little spoiler, the price does start to go in my favor. But the question becomes, it's easy. The voices in your head are going to say, oh, Clay, you should have held. But remember, that's now what's known as confirmation bias, right? You have a bias that you are confirming. The bias that you're confirming is you want to make money. And if you had held, you will make money. But what's making this confirmation bias extremely strong? Well, the fact that you see that you would have been right. It's starting to go in your favor. You shouldn't have sold up there. But what is the risk? The risk is, well, what happens if it didn't stop here? What happens if the price, let's use this. Let's say when the price was coming up here, it got to me and then just kept on going up and up and up. What happens if that happens? Well, I'll tell you what happens. A lot of bad things are going to play out. In other words, my loss is going to get extremely, extremely large. Now, well, Clay, you're just saying that could happen, and you're right. So if you want, go check out the video. I'll put a link down below. I will put an image up right now on the screen of what it looks like. But go watch that video, and you will see an example in that video where, I get out, and then the thing just keeps on going and going against me. So in other words, I took a loss at a spot that was very, very smart. Now, coming back to this example, it's a bummer. It's very annoying. It's embarrassing. It's insert blank, any sort of, kind of frustrating type emotion. But here's the next concept that you need to realize. So at the end of the day, you've got to manage risk, right? That's principle number one. And if you're an experienced trader and you've survived in the markets, I'm sure you understand the importance of managing risk. You got to manage risk even when it gets annoying. But here's the thing. When it gets annoying, you really have two choices as a trader. So when I saw that happen, I have two choices. I can sit here and play the victim. Oh, those evil market makers. Oh, those algorithms. Oh, the markets are rigged against me. Or just put on my big boy pants, be like, hey, I managed risk. I honored risk. I kept the hole manageable. I kept the hole in an amount that I can climb out of. Maybe not necessarily today, but within the very, very near future, the loss that I took is something that I can get myself out of without needing to trade like a superhero or without needing, oh great, now I got to spend the next couple months trying to dig out of this hole. No, not at all. I kept it small. So you can play victim or you can just say, move on. Move on to the next trade. But in many situations, and I guess this is kind of a little asterisk here, this is the importance of why you need an actual strategy. Why you need to know what you're looking at, why you need to have rules and sets of circumstances that you know to identify. Because now I don't want to say that what you're about to see happens all the time, but in this situation, quite literally within like the next 15 seconds, I moved on, but I moved on to the exact same stock. And I was like, oh, well, all right, here we go. Let's see what happens with it. Now, there's also the fine line. You want to make sure you're not revenge trading. But again, that's what goes back to you need to have a strategy with defined circumstances, with defined rules, because you're going to know you're revenge trading if you look at something and say, well, it kind of meets that criteria and it sort of matches up with what I want to see. Well, I'm going to make the trade. No, that's revenge trading because it kind of, sort of is not good enough. But for me, because I have my list of criteria, so I have my list with all my little bullet points. So we'll just call it the list. So because I have the list, I was able to move on, identify a new trade, and then, well, let's just go to my desktop and I'll show you what happens. But I still like that level. If this thing rolls back over, I'm going short there. And that would not be a revenge trade at all, just because that's still a great, great level. My timing was off, though. I anticipated it. In fact, what's this? 185. Yeah, 185.75 I would be interested in, especially if I can get a attractive candle here, which I think I'm going to get. So I'm going to get back in here at 186.05. So let's see if we can get this thing down finally to 185.50 and then get the break of it. There we go. Now the markets are pulling back here a little bit. But let's see if we can get this to move to the downside. Can it get down through 185.50? It's approaching. There we go. Let's see some more downside momentum. So still have 300 shares left. Let's see if it can get down through 185. Okay, have 200 shares left. Looking for some more downside movement here. So let's see if this thing wants to keep on moving. Took out another 50 shares. And all out there, very nice. Might have been too premature, but I'm thinking it might want to bounce off that area. Plus, I didn't want to risk giving back the gains of what I got back. So got back that entire loss. Pretty cool stuff, huh? So to quick recap things on the very annoying trade, I took a $465 loss. Kept the hole small, right? Annoying, we've been through all that. Not pleasant. But I did the right thing. I honored risk. I kept the hole small. But because I moved on, because I didn't sit there and play the victim card, right? That's the downside of playing the victim card. Sometimes, I mean, had I done that, what would have happened? Well, I would have missed that entire trade. And that you don't want to, that's an opportunity cost, right? Missing out on some sort of opportunity. But I didn't. I moved on because I had that list. I quickly identified, oh, wow, I still like this trade if, boom, 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 these other things happen. They did happen. I took the trade. And then I walked away with $540 in profit. So not to insult your mathematic intelligence, but 540 is bigger than 465. So not only did I wipe away that entire loss, but I actually then put $75 into my pocket, which is not too bad considering at one point I was down in that little hole of 465. So that is how you survive as a trader. You've got to manage risk. But unfortunately, managing risk is not the only thing that's required, because if you manage risk, you take a loss, and then you start to let all the voices in your head play games with you, well then there's a lot of bad things that can happen. And one of those bad things being you just miss a great opportunity like I had here, and then maybe you missed the bad opportunity, you get that much more frustrated, and then you go on really revenge trade on something, which is, and I've been there before. I've missed opportunities. So I'm not saying that I'm perfect like this all the time. I'm just saying that I know, I speak from experience, when you take a loss and then you hesitate on a great setup and then you see you would have been right and then you see, wow, not only would I have been right, it would have wiped away my loss. Wow, that really screws with your mind and makes you want to get out there and trade that much more, which is a very dangerous situation to be in. But you need to just realize that yes, you got to manage risk. Yes, it can be annoying. Yes, it can be embarrassing, but by keeping the hole small, you give yourself the opportunity. But you've got to be able to actually take the opportunity. But you don't want to force a trade. You don't want to be revenge trading. And again, you separate that by having a true strategy, by having the list, by having certain criteria that need to exist for you to know that you're taking a valid trade and not just forcing some sort of trade. And that's going to keep you surviving and thriving in the market. So hopefully you help this out. Hopefully you enjoy these videos where I talk kind of theory on the blackboard, but then actually show you live trading results from my trading. And on that note, please check out the channel as a whole. If you enjoyed the live trade video snippets that I showed, there's an entire playlist on the channel that you can check out, and then a lot of other videos. So hope you decide to hit that subscribe button. If you like this video though in particular, please, very fast, quick way to communicate that to me. Hit that like button, really helps me out and I appreciate it. And then finally, comments, questions, suggestions for future videos, leave those down below. I do, if you've ever watched my past videos and look into the comment section, I do read all comments and I will reply to them. So like I said, I'd love to hear from you and I will reply back to you. But get out there, survive as a trader. But remember, in order to survive and then thrive, you got to be able to identify those opportunities. So make sure you have yourself an actual strategy. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.